Welcome to this fascinating journey through the remarkable history of credit, a story that spans thousands of years of human ingenuity and economic evolution. From its earliest known forms in ancient Mesopotamia to the sophisticated, instantaneous digital payment systems that power the modern global economy, we'll highlight the most significant milestones, inventions, pivotal cultural shifts, and transformative technological advancements that reshaped the of credit and change the way individuals, businesses, and entire societies borrow, lend, spend, and trust one another today. The concept of buy now, pay later is not new. It has deep roots in antiquity. Ancient civilizations, such as those in Mesopotamia, Egypt, and Rome, practiced various forms of credit. Farmers might exchange future harvests for seeds, or merchants would allow customers to pay for goods after a successful trading season. These informal agreements were based on trust and local customs, providing essential financial flexibility long before modern banking systems emerged. Understanding these precursors helps appreciate the enduring human need for flexible payment options. During the late 19th and early 20th centuries, individual merchants and large department stores created their own proprietary charge account systems. Customers could open an account directly with a store, allowing them to make purchases on credit and pay later. These systems were highly localized, usable only within that specific merchant's establishment. They established the fundamental idea of buying now and paying later, a core principle for the modern credit card industry, despite their limited scope and reach. During the 19th and early 20th centuries, merchants developed innovative methods for customer identification and tracking purchases. These charge coins or charge plates were physical tokens, often made of metal. They allowed individuals to make purchases on credit, with the merchant recording the transaction. This system facilitated recurring business and built loyalty, effectively serving as a precursor to modern credit and loyalty programs. Understanding their function provides insight into the evolution of consumer finance. The American Airlines Air Travel Card, launched in 1934, was a groundbreaking innovation in credit payment systems. Before this, purchasing tickets on credit was complex and often limited to a single airline. The standardized numbering scheme was crucial as it allowed interoperability across different airlines. This laid the groundwork for future universal credit cards where a single card could be used with multiple vendors. In 1946, Brooklyn banker John Biggins pioneered the first bank-issued charge plan, Charge-It. This system enabled customers to purchase items at local stores using a special slip, with the bills then sent directly to their bank. The bank would reimburse the merchants, and customers would pay the bank. While not a credit card in the modern sense, as it required funds to be present, Charge-It was a crucial step towards separating payment from immediate cash. It was a localized, paper-based system, but its underlying principle was revolutionary. The 1950s were a transformative decade for consumer finance, moving beyond proprietary store cards to introduce general-purpose credit cards. This innovation allowed consumers to make purchases across a network of different merchants, with a single card, significantly increasing convenience and flexibility. This shift laid the essential foundation for the widespread adoption and development of the credit card industry we know today. The Diners Club card marked a significant innovation in consumer finance, being the first multi-use charge card. Frank McNamara's experience of forgetting his wallet during a business dinner led to the idea. The card allowed members to dine at multiple establishments and pay a single monthly bill, setting the precedent for modern credit and charge card systems. Its initial success quickly expanded beyond New York City. In 1958, American Express made a pivotal entry into the payment card market with its first charge card. Initially crafted from paperboard, its rapid transition to more durable plastic by 1959 signaled the burgeoning market appetite for efficient and widely accepted payment methods. This early adoption showcased the clear demand for multi-merchant solutions, laying groundwork for future card systems. This innovation offered consumers a new level of financial convenience. The Bank AmeriCard 1958 introduced revolving credit. This allowed users to carry balances and pay interest, unlike earlier charge cards. It boosted consumer purchasing power, fundamentally transforming finance and setting the standard for modern credit. Following 1950s innovations, the credit card industry grew rapidly. Major payment networks formed, standardizing global transactions. Transformative technologies like magnetic stripes and electronic processing emerged, revolutionizing usage and security. This era established the modern credit landscape. The Interbank Card Association, ICA, the precursor to MasterCard, was established on August 16, 1966, as a consortium of U.S. banks and regional bank card associations to compete with Bank of America's Bank AmeriCard, later Visa. The initiative was led by Carl H. Hinkey, Vice President of Marine Midland Bank, now part of HSBC, who convened a meeting in Buffalo, New York. This gathering involved 17 bankers representing various institutions. By the end of 1967, the ICA had grown to 150 members. The year 1976 marked a transformative rebranding for Bank AmeriCard, which became Visa. This strategic spin-off allowed for greater independence from Bank of America and paved the way for ambitious global expansion. The name Visa was intentionally chosen for its universal appeal and ease of recognition worldwide, symbolizing a unified global payment system. This pivotal rebranding was essential for establishing Visa as a leading independent international payment network, driving its growth into a dominant force in the global financial landscape. In 1979, a pivotal moment occurred as the Interbank Card Association officially rebranded itself as MasterCard. This strategic move was crucial in establishing its identity as a distinct and powerful global payment network. The rebranding marked a significant step in enhancing its competitive stance against rivals like Visa, propelling MasterCard's efforts to expand card acceptance across the globe and cement its position as a leading financial services brand. This transformation was key to its long-term growth and market recognition. In 1969, Forrest Corey Perry, an IBM engineer, introduced the magnetic stripe, a breakthrough for transactions. While working on a U.S. government security project, he pioneered attaching magnetic tape to plastic cards for data storage. Struggling with adhesives that warped the tape, he got a key insight from his wife, Dorothea Perry, using an iron's heat to bond the stripe directly. It allowed electronic reading of card data. This innovation drastically sped up processing, enhancing both convenience and security in overall transaction times. This was a crucial step towards modern electronic payments. The Truth in Lending Act, TILA of 1968, responded to surging credit card use. It mandated clear disclosure of credit terms like interest rates and fees, empowering consumers. This protected them from deceptive practices, enabling informed financial decisions and fostering market transparency. The Equal Credit Opportunity Act, ECOA of 1974, was a landmark law prohibiting discriminatory lending. Previously, credit could be denied based on race, gender, or religion. ECOA mandated that decisions be based solely on an applicant's financial merit. This ensured fair access to credit for all eligible individuals, combating historical biases and fostering a more equitable financial system. It was crucial for promoting inclusivity and consumer protection in finance. The 1980s were a pivotal decade for customer loyalty, witnessing the birth of credit card rewards programs. Diners Club played a crucial role by being among the first to introduce such initiatives, offering cardholders incentives for their spending. This innovation transformed how businesses engaged with customers, setting a precedent for the widespread adoption of loyalty programs across various industries in subsequent decades. It shifted consumer behavior, encouraging continued use of specific cards. EMV chip technology, developed in the 1990s, addressed rising credit card fraud. It became the U.S. standard by 2015, significantly boosting security. Each transaction generates a unique encrypted code, making it very difficult for fraudsters to clone cards or use stolen data. This innovation dramatically improved transaction safety and reduced instances of card-present fraud. Contactless payments and digital wallets, like Apple Pay, simplify transactions. Utilizing NFC, they offer secure, tap-and-go purchases, enhancing convenience by reducing physical card reliance and speeding up checkout. Embedded security features like tokenization improve fraud protection, marking an evolution in payment systems for faster, safer transactions. The future of credit is evolving toward personalization, security, and decentralization. Traditional credit scores may give way to dynamic, real-time assessments powered by AI. Digital wallets and blockchain-based identity systems could enable individuals to carry portable, verifiable credit profiles, making credit invisible yet omnipresent. Biometrics and tokenized transactions will enhance fraud prevention. As credit becomes more inclusive and adaptive, it may shift from a static score to a fluid reputation system. Thank you for watching, and see you next time.